Hey everybody, Tom Tetao. Welcome to Tom's Trading Room. It is Friday, April 3rd, 2020. As you can see beside me here, a lot of social distancing, not too many people on this street. And in fact, 700,000 Americans got socially distant with their job today as we had the jobs report that came out for March. Worst month of job losses since 2009. Now, the markets opened flat, but they've been trending down since. And so I want to share that with you right now. If you take a look at what's on my screen here, you can see this was the high for the day for SPY. It was trading above 253, the first hour today high. The first hour low was trading right around 249 and change. So around 10:40 a.m., we started trending below, kind of popping below that low. And we got all of a sudden got serious after 11 o'clock and have made new lows for the day. Now, I don't just look at the S&P itself. I want to look and see what's going on in terms of other areas. So I need confirmation. So first I turn to the U.S. dollar, and I notice the U.S. dollar is actually up on the day. And I've been talking about this for pretty much the week, that the U.S. dollar was going to creep up as traders were getting out of equities and getting into cash. You want to know where else they're going? They're going over here to the bond market. This is TLT. This is the iShares Treasury Bond 20-year ETF. It basically is government bonds. And as you can see, as traders have been going out of the equities behind me, the money has been flowing into bonds, and we are now above the first hour high and have been so since about, guess when? 10:40. Around 10:40 a.m. is when things started cooking. Stocks started selling off, bonds started going up. Finally, I look at oil. Now, oil is kind of an odd man out today. It's gotten some additional gains from yesterday's report that the Saudis and the Russians are going to tighten the screws and limit production. And so I think this is going to be yesterday's history next week. And I expect USO and the oil market to dribble back down. And so we'll see what ends up happening next week. But I think everyone's going to forget about this because we have such a glutton of oil out there. I mean, the U.S. Reserve is now going to start storing oil for private companies. This is how much oil we have out there. The Saudis, the Russians, we could all stop pumping entirely. And it's not going to change the fact that we've got too much oil out there and not a lot of demand. All right? So what do I expect? I expect to continue to see this moving lower, and full disclosure, I am short these markets right now for the short term. If you're an options trader, let me talk about what you don't want to be doing, all right? This chart right here is the ranking of the most expensive options right now looking out over the past year. So if you're bullish or bearish on any of these, Boeing, Silver, Gilead Sciences, Square, Raytheon, gold, GLD, etc., all the way down, you don't want to be buying calls if you're bullish, and you don't want to be buying puts if you're bearish. And the reason why, very, very hot volatilities. I've got the high IV for the year, I've got the low IV for the year, and I've got the current. And the currents here are telling us that all of this, all right, from Boeing to silver and gold, Gilead Sciences, Raytheon, Fastenal, Shopify is on here, Realty Income. These are all expensive options. You know, if you like this stuff, why not spread? Why not do the three things that we talked about doing and we've been talking about for now 2 months when it comes to a world crisis like the coronavirus? Step one, take less risk in your strategies, all right? The way the markets are moving now, you need less than half the amount you needed in February to make the same amount, so take off less risk. Step two, look at what's going up in a down market. All right, what's going up in a down market? Well, today it's the US dollar and it's Treasury bonds. You know what else goes up in a down market? Put options, put spreads, things that make money when stocks and indices go down. And then finally, speaking of spreads, exploit volatility with options. That's step three. So what am I doing here? I am looking at spreads. I'm looking at selling options. I can sell options and buy options and create limited risk and that limited upside exposure while keeping true to my systems and my strategies, which are right now trading this down market. All right. Hey, thanks again, guys. Have a great weekend, and I'll see you again next week. Bye now.